Good weekend. Ira Epstein, and here we are in your Labor Day weekend version of your stocks, spiders, ETF video. And this is for Friday, the first day of September, 2023. Hard to believe in 20 some odd days we'll be in the fall. Wow. All right. Today was a huge day in that we got, obviously, the all-important jobs report. And when I looked at the report and I watched traders' reactions to it, I was confused. Number one, why was the stock market up so much? That was the first thing that I was wondering. It was up going into it, and it didn't break until much later, probably an hour, maybe 2 hours after the report came out. And I think people had a chance to digest, and they came to some conclusions. I did. This was one heck of a confusing report. Remember, it's for the month. We have the Screen Actors Guild. We have the Writers Guilds. They're all on strike. Yellow Freight. 37,000 drivers gone. So we, instead of 170,000 jobs, we got 187,000. What would have happened? Now you got to ask yourself, if those people weren't laid off, what would be the impact in one way on it? Number two, as we all know, the White House loves when these numbers were building jobs. They never come on and tell you, but for June and July there was a correction and we took back 110,000 jobs. Regardless, it's been a great year of adding jobs. But if I'm the Fed, here's what I'm saying. Okay, unemployment rate did go up to 3.8%. That's what I want to see. Participation rate, though, went up 0.2%. People returning to the market, I guess, as the summer's coming to an end. What'll that do to price pressures? So then I go and I look at what's going on in the average hourly gains. And they're not as big as they were last month, but they're still up. They're not negative. They're not flat. They're still adding. So I look at the jobs report a little different, I guess, than everybody else. And I kept wondering, what was going on? Now, I don't want to go there yet. Let me finish up with what I'm saying. I just hit that by accident. I think it was a report that was right with what the Fed wants to see. I don't think it causes them to raise interest rates, but I don't think it's anything to make them break it. Number two, it puts into light very clearly that the JOLTS report with this fits in with fewer jobs being offered. We're seeing that the turnover rates are smaller. We saw who was let go just now, and it's the temporary workers. No surprise, they were ending the summer and so on, so I can get that. Hospitality still okay. So manufacturing not adding so much. You know, so I walked away saying, I still think the CPI and PPI could be determining factors. If you were to ask me which way you go, I fully understand the argument that we shouldn't go any further, that things are starting to slow down, and if we keep adding to it, maybe we tip the scale so much that the Fed's got to rush in to save the day. I get that. On the other hand, you aren't dropping the wage gains. They're slowing down. Admitted, that's what you want them to do, but they're still there. You're still added 187,000 jobs, but you took away 110,000 we thought we had. That sort of balances itself out to a good degree. So I think if push came to shove, without seeing the CPI and the PPI, I would think this gives the Fed enough reason to be cautious and hold. I'm not in the camp yet, but that's how I walk away thinking about it. So CPI, PPI going to be very important. Okay. And that's why I think the market gave up the gains. I think the market realizes this could still tip either way. Did you bother to take a look at what happened in TLT, BND, and what interest rates were doing? They were playing inversion game. They were taking down, remember the 210, how it went out like that? Now it's the other way. The back end's holding the rate better than the front end. And we know that the Fed isn't the one responsible for that. It's most likely the U.S. Treasury, which just keeps issuing notes and bonds as they keep borrowing away. We have another issue, and I've got to bring it up. Where are we going with our budget? We're in September. This thing's coming to a head. Will everybody agree? Are they going to give you an extension? Are the Republicans going to make it a big battle? I don't know. But It's not clear sailing. All right. When I look at XOM, energy prices have gotten very strong. I was doing I don't know how to explain it, a jig, an Irish jig, and I'm not Irish, looking at OIH today because I've been telling clients I thought oil was going to go towards 90, and I'm certainly getting that move. And that was off what I see in the futures, and the OIH did it. Well, Exxon's seeing the same thing. Now, I keep looking to see what's going to go on in Australia with these strikes in LNG, and at least we know that, I think it's the Woodward Group, I'm hoping, get things settled. I'm not seeing that the other two have made any determinations, the other two big companies. When we take a look at this, higher lows, higher highs, bullish. The market is staying over the 18-day average with that, bullish. The swing line, though, is real bothersome. This is a market that's brought these in like that. What do you do the first time you hit a Bollinger Band and you're overbought? I teach you come out of the market. So as friendly as I am in terms of what I think oil's doing, no. When I look at this, very difficult to stay over the upper band. Can it be done? Of course. There's magic all the time. You did it a bit here. And when markets want to take off, they can get over it. They pull back in it. They keep hitting it. That could be. But we're not there. I don't know what it's going to be. I know that if you've been sitting next to me, I'd be going, boom, take some money off the table. In Microsoft, okay, so as we come over here and look at this, I just want to make sure I didn't jump too much. I didn't. Microsoft, real important number. If the market takes out now 332.98, what happens is the market will generate an instant buy signal on the weekly chart. You would then have higher lows, higher highs until you get back underneath this low, which is this week's low, opening the target for wherever the Bollinger Band is, and momentum would most likely turn up. That's what could happen. Who's defending that not occurring? The bears, because the current pattern is one of lower highs, lower lows. So the bears are protecting this 329.58, and I've given you the battle number as I see it. In KRE, the trend is up, higher low, higher high. You did get overbought. You corrected a bit. Both numbers are not over 70, but any move higher could kick that one very quickly up there. Here's what I'm seeing. I am looking to see, do you get underneath this 42.81? That would put a heck of a lot of pressure on this and all of a sudden turn this bearish. So I'm not interested in the buy for the reason I said. You're too close to being overbought. I'm also not ready, but if it gets under there, I'll probably tell my subscribers in my morning videos, hey, I think this is something you've got to take an immediate look at. And that brings me, I might as well go to this. We're ending the Labor Day sale. I want you to take advantage of it. It's your call, okay? And one person write me, how dare I hawk it the way I am. Folks, you're not going to get another 40% off. A lot of you like what we do. That's why you're watching me, I would think. My full charting courses, my embedded one, my outside day course, all 40 off. Any yearly subscription purchase, 40 off. IraEpstein.com, or move your cursor to the top here. Away you go. By the time you see this again, my next videos, this won't be on it. So this is your last chance with me if you're watching me on a video, because on Tuesday, there will be no sale going. All right, let's go to the markets now and get back here. So that's what I'm looking on KRE. In MSCHI, nah, back and forth action. You went from the upper band to the lower band, sideways, hanging around the 18-day average. We know that China needs to do things. The world is prodding them on to do things. It's not easy for them. They don't like to make these changes and be told what they have to do. But simply put, if they don't do things to turn around their manufacturing, which is gradually turning, but they need the world orders to come in to help them turn it further. They apparently can't get their own people at this point to trust and just spend the money. They're cutting this right now. They're cutting what they pay the Chinese people with their banks, their interest that they get paid that, and they're cutting all kinds of mortgages, everything I understand, but I don't know by how much. It hasn't come out in the papers yet. So they are trying things. Will they be successful, and will anyone believe them? Is it too late for their property market? You know, countrywide, these others, I think there's big problems here, and I'm just fearful any day you wake up and they're in the complete going out of business pattern. Who knows? XLI, overbought as can be. That's all I look at. Higher high, lower and low, why get involved? Energy, you know I'm friendly on this. Higher lows, higher highs. Couple of things. Number one, the world hasn't gone to sleep. Look at the softish landing we're getting. Remember the word recession. I still hear people talking that, and they could be very right. As long as rates stay high, people are in debt, interest rates going up, people spending the monies they had from COVID, problems can happen. And if orders don't come in from business, as you're seeing the temporary workers being let go, you know, they're the first ones to go. The next ones are other people. We always got to pay attention to where we're at. We're at that funny part in our economy. It's good and it's bad all at the same time. So, but the energy, well, the Saudis are saying they're going to cut again, or maintain the cuts, probably the right word. Will that be enough to offset increases from Iranian oil, which are increasing on the world market, along with Venezuela, which we're letting back into the marketplace? In UUP, we have an overbought dollar into a Bollinger Band. I'll let somebody else try to figure out what that's going to do. And if I can't figure out the dollar, I don't know what to do with gold. And I know you're going to tell me, Ira, gold had a heck of a rally. Why is it rallying with the dollar? Well, first of all, it isn't. It bounced back to the 18-week moving average of closes. When I come to the dollar, this has been the rally market. But you can't say in the same breath that this is a bull market in here. It's a bounce. Is it uncommon for them both to bounce together? Well, these reports are so unusual. Do you take the side that the dollar doesn't belong up because interest rates are going to fall and this is its last hurrah? Do you take the side that if that occurs, inflation is still here and it's not apparently falling at the speed that the Fed wants to see it? While labor is coming down, you still have that long trajectory of less labor, eventually less inflation, blah, blah, blah. You know the stories that we get with that. I hope you do. In GDX, oversold. Lots of resistance at the 200, the 18, the 100, but I don't see a trend. You got a higher high, lower low. I see a market that's more drifting than anything else. Tesla. So now I can go out and get a new Tesla if I want. I just read some of the cars, I guess, that were 120,000 are down to under 80 now. So they keep lowering it. I applaud Musk. He did do the job of revamping some of the cars, and I haven't seen all the pictures yet. I don't think anyone has, but I'm hearing it's good. I read about what the revamping did, what they're making it look like, the new nose on the car, the less subtle, but I don't think he's going to alter dramatically the look of the car. I think he's happy with what he's got, but it's a refresh, and it's well overdue. At the same time, trying to get the price down, again, sticking it to GM, Ford, Stellantis. I have a profit margin I can do this with, is what he's saying to himself. You don't have any margin, your losses will get bigger, and what you thought you could sell for, now you can't. Here's my top end, and I've got another model coming out that might be even cheaper than the Model 3. So it's turned into a heck of a game. He had to do other things to make his cars compete, by the way, with BYD in China. And I've read that the first reviews of the new car are well received. So we will see what happens there. But if you're owning the stock, you got to ask yourself, what's going on here? We keep cutting price. The margins are getting cut. Are we going to sell enough cars to make up that difference in total volume? Just be careful if you take this out. You get under 212.36, and this market can give you a real shocker to the downside. You're in the resistance of the 100-day average, and you're playing between that and the 18 right now. Uber, still, what kind of market? Well, interesting one to say the least. Number one, you lost the embedded reading. Often when that happens, you do make a run to the 18-week average of closes before you go back over the high that was made before that happened. I wouldn't want to be a buyer for that reason. Generally, you hit that. The strength of Uber, though, is very clear. Why? Normally, when this occurs, it happens in a short order of time. The longer it takes tells you how good the market is at that point in time, at least right now. In Apple, I've warned everybody come September 12th, we get our new products, and there is a tendency, go back and study Apple releases, that before their new products come out, the stock has a tendency to rally. Is it trending? It is not. Higher high, lower low. It's bounced nicely. It was down to 171.96, so here we are back at 189.46. And I have been telling you for these 2 weeks, after it made this low over here, I said you don't want to be short this market in front of that, and it's worked out. In Google, you're up to a big resistance point of the upper Bollinger Band. You are not embedded. I think the pros are taking some money off the table up here. There we are with the other part. So you put it all together. That's your game plan. I'm going to remind you, if you want to take advantage of the sale we have, move your cursor to the top here. It is IraEpstein.com. You can see research and/or education. You have a great weekend, folks. I'll see you Tuesday.